In this video, we are going to be analysing Disney. So to get straight into it, what are going to be key support levels if we continue back like the overall market is? So as of right now, we have currently come into our statistical mean on the 6-month chart. We can see that is at $94.60. And basically, or near enough, intraday, we have nearly hit that. So hopefully today, that when this video goes out, we have probably come down to this level. And really between the ranges of there and 92.50, this is where we would expect some sort of buying pressure to come in, because this is overall where we expected the stock to reverse to. So we may get a temporary bounce, but if markets continue weak, we will most likely continue lower. Then we're looking at $75, $67, and if we break that, we're going to be paying attention to the $56. So these would be really the key levels that we're paying attention to in the near term. If markets continue weak, we break the 92. We will then break most likely past that the 52-week low at $90, and if we fall there, really, this stock can really start collapsing, and we would be looking at $75 as that kind of key support level. Obviously a key psychological level, but also that first deviation on the 6-month chart. And if we do continue again, we're always looking for that same pattern, a break below, come back to retest this level. This will just confirm it to the downside, and if selling pressure kicks back in, then you can expect to move to 67, then 57, and then if we break that, we're looking at final levels down to 41, 38, and $16. Obviously going down to $16 and those kind of lows is probably quite unreasonable, but really the 75, the 67, and really the 57 can all definitely be hit if markets continue weak over the next few months. Now, onto the other hand, if you're paying more attention to the resistances, you want to know what are resistance levels if we continue to push up. Then we're paying attention to the $113.50 mark with a close resistance after being around $118. We can see this was kind of as well is going to be a key level of notice, because this was basically the gap fill that was created a few weeks back. But if we can break that and continue higher, we are then paying attention to 132, 142, 150, and final levels taking us to 168, 170, and a final one at 194. And again, the same thing. In the near term, we probably aren't going to hit any of these high levels, you know, the 150 and above. But all you need to pay attention to is if we start coming up to one of these levels, for example, the 113 and the 117, what you want to see is a break above these levels, come back to test it as a support, and if the level holds, it shows investors and traders have had time to think about it. They're happy to still own the stock going past this level, and more than likely we will continue to that next deviation, and in this case that would take us to $132. Anyway, that is the breakdown on the Walt Disney Company, ticker DIS. If you enjoyed the video, why not drop a like and subscribe, and check out one of these two analysis videos.